Hello, it's Jeff Evans, just taking you through the final accounts prep exam, sample 2. I'm going to do it in two parts just because of timing. So I'm going to do question 1.1 and 1.2, and I'll do the rest of the next couple of days, and then I'll put it online. So as far as this question is concerned, it's a incomplete records question. So I always tend to students to write down the information you've got to find out the information that's missing. To save time, I've already completed the various accounts, but I'll explain the process as we're going along, so hopefully you'll have some understanding. So sales ledger control account, so we're given our figures here, our trade receivables. So our customers owed us, by the 31st of March, they owed us 8,924, so our balance brought down. And then we got our balance carried down on the 31st of March, 2007. Okay, so that's basically the amount of money that our customers owe us. We've then got other information, as you can see, so your trade payables, your closing inventory in your bank. So we were overdrawn, and then we weren't at the end of 20X7. And then we've got receipts and payments recorded in the bank account. So we received £79,000 from our customers. We've paid £39,000 to our suppliers. We've got a capital injection of £4,000, so credit capital debit bank for £4,000. Office expenses, we spent £22,076 on office expenses, and then we've also got proceeds from sales of a non-current asset. So we made £2,950 from a sale of our non-current asset. And then we've got bank charges of £178, okay? And then we've got a bit more information, which it says, so a contra entry of 318, £318 was made between the sales ledger and purchase ledger. So remember, that's a situation where your customer is also a supplier. So therefore, rather than just go, there's £318 for you, off the money that I owe you, and they go, there's £318 back, then we don't obviously do that. So we adjust it through the accounts, and you'll see that when we do the sales ledger control account shortly. It then says the proprietor draws £1,650 per month from the business bank account for personal use. So that's drawings, isn't it? So we're going to have to work out how much does he take out in drawings. So, as you know, credit bank debit drawings, which we demanded for that. And then the proprietors transferred their own office equipment valued £1,400 to the business during the year. So that's more of a transfer. That doesn't really affect the bank. Okay. And then non-current asset sold, the non-current asset sold in the year was a motor vehicle. Okay. So again, with incomplete records, first thing you do is put in the information that you've got to find out the information that you need. And this question is about us finding. So what we're trying to find what the total sales figure is. Okay. So I do say to some students, we're doing a sales ledger control account. So in this example, it tells us that our balance brought down on the 31st of March was 8,924. So our customers owed us 8,924. What increases it? Credit sales, doesn't it? What reduces the amount of money our suppliers owe us is when they pay us, or when we give them a discount, or a contra entry, whatever the case may be. So they tend to be, those are the type of things that have an impact in relation to our particular accounts, okay? What else? Discounts received, I said before, any bad debts to reduce it, so on and so forth. But this one is just, let's see what information we've got. So first thing, we've got our balance brought down. So that's what we got. And then we've got our balance carried down. So I put those figures in first, making sure I've got enough space for any other entries that I need to do. And then we'll have a look at the bank. So then it tells us here that the amounts received from credit customers, so they've paid us 79,805. Best to tick those off as you go along, so you know, okay? So 79,805 they've paid us. There's also that £318, which is that contra entry, as you said before. So we would basically credit the sales ledger control account, and we would debit the purchase ledger control account for the contra entry. But anyway, for this one, so for the purchase ledger control account, we are going to credit the account because it reduces the amount of money our customers owe us. We'll just take that one off. So therefore, we've got all the information that we need now. Okay, we've not got any discounts or anything like that on there as well. So therefore, as a process of elimination, I should remember to tick these off. Good practice. So as a process of elimination now, I can work out what my closing figure is. So if I add up those with the side with the greatest amount, is this side, so 79,805 plus 318 plus 9027 gives us 89,150. Take it across without thinking, and the balancing figure is what your credit sales figure is going to be, which is what we're trying to find. Okay, so the sales figure is 80,226. Next question is to do, we need to find the cash purchases from the summarised bank account. So I've put all this information, but let me show you. So as far as your bank is concerned, it tells you here that the opening balance is on the credit side of £3,283. See, so I've put that as a balance carried down because it tells you the question it's on the credit side. It means they were overdrawn, doesn't it? Okay. Now this is tricky because for this one, it tells you that at the 31st of March 20x7, it will be on the debit side. But for our purposes, we're going to put it as a balance carried down, as we did in the previous question. So we've got balance carried down here. We're going to put the balance carried down on the credit side because it then becomes on the debit side when we bring it down, doesn't it? So it's a bit sneaky, that one. But you'll see, I'll put that into the balancing figure, then the balance carried down of 1568, because it becomes balance brought down at the start of the next period, doesn't it? Which means that we've got £1,568 in the bank. Okay, so going through the question, again, I've done this on a T account before, and then I've just gone through each part of it. So the first thing I've done balance brought down on the credit side of £3,283. And then I've looked at the information I've got here and what entries do I need to make on the bank, the base of the bank account, a bit like the cash book, isn't it? So it tells us here, so we've paid 79,805 to our customers, which we did here, which we put in our, so that our customers paid, or should I say? So that again. So we received 79,805 from our customers. So therefore, I'm going to put that on the debit side of the bank account, okay? Because that's what we received. It then tells us that we paid £39,090 to our suppliers. So remember, money in the bank is a debit, money out of the bank is a credit. So therefore, we're going to credit the bank for £39,090. You know this from your double entry, don't you? So you debit, you debit expenses, asset drawings, credit liabilities, income and capital. So let's do the double entries going along. So with credit bank, debit, trade payables will be for that, wouldn't it? For the cash injection, this is when we've got £4,000 in the bank. So we're going to debit the bank for £4,000 and it would credit capital. But for this one, so we're going to have put £4,000 in the bank. Okay. So next one, office expenses. So credit bank, debit office expenses. So we spend 22,076 on office expenses. So again, I've credited the bank. What else? Proceeds from the sale of a non-current asset. So we received £2,950. So that will go into the bank. So we can see we've got the disposal of non-current assets. So we've got £2,950 from that disposal. And then bank charges. So we've paid bank charges of 178. So credit bank, debit bank charges, and expense in your profit loss account. So therefore, there's your 178. I should tick these off as I'm going along. It's good practice. So make sure you do it so you don't forget. And then we've got to look at the other information. So we've done the contra entry in relation to that purchase ledger control account in the sales ledger. And then it says, so the proprietor draws £1,650 a month from the business bank account. So we work it out times 12. So we will credit bank, debit drawings, wouldn't we? And then you'll see here I've credited the bank for £19,800. That's it. So credit bank, debit drawings for 19,800. The proprietary transferred their own office equipment value to the business during the year. Well, that's just, that was that like equipment and capital, isn't it, really? So it doesn't affect the bank account. And then it just tells us an non-current asset was a motor vehicle, so it doesn't affect anything else. So what we've done now, so we've put all the information that we've got. So therefore, it enables us to work out the information that we need. So again, do your T accounts first. I would do it first before doing it on the exam question, and then you can see if it all balances then, can't you? That's how I did it. All right. So put in the information you've got to find out the information that's missing. Okay. 1.2. So he said this task is about incomplete records, which we've just been doing, and applying ethical principles when preparing financial accounts. So incomplete records is a term that may be used when part of the accounting system of the organisation is absent. But that's what we've been doing, is it? So that's true, okay, because it is incomplete records. We've not got all of the information that we need. So we put in the information we've got to find out the information that's missing. Okay. The next one says you're a trainee accountant, technician, working on the final accounts of a sole trader client. The client is registered for VAT. The cost of goods sold during the year to ending the 31st of March 20x7 was £120,960 opening stock, plus purchases minus closing stock, gives us our cost of sales. So our cost of goods sold, 120,960. Inventory decreased by £550 during the year. It says, so calculate the total value of purchases net of VAT for year ending 31st of March 20x5. And all I did is I did cost of goods sold minus the stock figure, which gives us 120,410. And that's what the purchases figure will be, okay? Yeah. The next one says, I remember doing this one when I was teaching it a few years ago. We said the trade has limited storage space, so aims to keep inventory equivalent to approximately 1 month's average. It says, complete the sentence by picking the most appropriate from the drop-down box, and you would make an estimate of, so what would the closing inventory be, okay? So we know here that the purchases figure was 120,410, don't we? So that will be the value of the purchases in that particular year. So the best thing to do really is just divide that by 12, okay? We said that, so they keep inventory approximately 1 month's average. So that's for the full 12 months, that 120,410 divided by 12 is just short of £10,000, minus 550, I suppose, if that's really new, which that purchase. So you're talking here of £10,000. The other ones are well off, aren't they? So definitely not 500. So if £120,000 your purchases in the year, okay, and it says up to 1 month's average trading, then it's best to just divide it by 12. And that's where the 10,000 comes in. For the next one, again, quite tricky, because it said the business sells its goods at markup on cost of 35%. So markup on cost is where your selling price is 100%, and then your markup is on top of that, isn't it? So this one is really just thinking about, so your cost of sales, so that's where your cost of sales is 120,000, so that's your 100%, and then you add 135% to it, so 1.35. So what I did for that one, so markup on cost, so 120,960, 120,960 times 1.35 is where you get your sales figure is 163,296. So remember, With markup, your cost of sales is 100%, and your selling price would be the 135%. With margin, remember your selling price will be 135 and your cost will be 65, wouldn't it? But anyway, so just bear that in mind when it comes to markup and margin. Again, this was a little sneaky one, I remember. So this one says, so sales rated VAT at 20% applies to all sales, okay? So the trader sells an item to a customer of £405, including VAT. Okay, there were no discounts, so calculate the original cost of the item to the trader. So what I will tell you is that £405 includes VAT, but it also includes the markup on cost. So let me show you what you do. So the best thing to do is do £405 divided by 120, which is the VAT element of it, and then multiplied by 100, which gives you a net figure of £337.50. Okay, say that again. £405 divided by 120, multiplied by 100, gives you net of £337.50. Remember that £337.50 is the selling price, okay, before VAT. So therefore, it represents 135%. So divide that figure by 135 and multiply it by 100, and that's where you get your 250. Okay, you can work it backwards, can't you? So what 250 times 1.35 is £337.50 times 1.2 is £405. So it works. It's always a good idea to check it. Okay, so again, just bear that in mind and read it carefully. RTFQ, as I say, read the flipping question. So this one says, another sole trader client, that's another sole trader client, you are asked to find some missing figures in their final accounts. It says, select one statement that will always apply to such work. Okay, let's have a look. So situations involving incomplete records always suggest your client does not act with integrity. Well, that's rubbish, because it could be just a mistake. Any association with missing figures means you will not maintain that you're not true. If you become connected with misleading information, so if you become connected with misleading information, you must disassociate it from yourself. From it, which you would, and you would report it to somebody, wouldn't you? High up. Next one says, while reconstructing the bank account, a total of £2,000 was identified, which you believe to be cash sales. The proprietor tells you by email that this is an injection of capital. So how do you treat this explanation? Do you accept it? These evidence is produced? Well, no, because it's not accurate, is it? Ignore the £2,000. It cannot lead to a material misstatement in the account. Well, it's £2,000, so you should do. Reject it because you need to contact HMRC. Well, you're not going to do that, are you? And then said, remember it and examine the bank records again with this new information. So you're going to check the bank records to see, basically how it's been accounted for, haven't you? So he says, well, so £2,000 you believe to be cash sales. The proprietor tells injection of cash, so you need to find out where it comes from. But that's the closest one to that, okay? So again, and forgive me, I'm only going to be able to do this up to 1.1 and 1.2. I'll do the rest of the questions in the next video, and then over the next few days, and then hopefully it will help you when it comes to doing the assessment. So that's it. Speak to you soon.